Good morning, everyone, and you're all very welcome to our Monday's market preview for the week ahead here at the Alpha Capital Group. I suppose the first and foremost, the big kind of talking point in the markets following last Friday's Jackson Hole Symposium sell-off is the fairly stern and bearish volatility we are currently seeing in the markets at the moment. As we know, and for those who are active traders, we've obviously seen the hefty sell-off in the markets brought about by the Jackson Hole Symposium and obviously the ECB comments on Friday regarding the potential discussions for a fairly stern, fairly strong hawkish increase in interest rates in September. So that discussion has obviously been introduced into the markets, and of course, markets are having to price that in accordingly. Now, of course, on Friday with the Jackson Hole Symposium, we know Powell's comments were extremely bearish, and we did see that kind of 2.5 to 3% sell off in the stock markets. And you only have to look at the equity indice markets, which we will be looking at very, very shortly, to, I suppose, visualize and I suppose indicate that as well. Now, we do know on Friday there was a 1.25 trillion reduction chalked off in the overall value of the stock markets on Friday due to that hefty sell-off, as you can see. So it is important to be ready for the week ahead, of course, with month end on Wednesday and of course NFP on Friday, which we'll be doing further videos on through the course of the week. But as we look at the markets today, broadly speaking, we are seeing a little bit of a pause in that massive sell-off that we saw on Friday. So we can see it across the board. I've got three indices here focusing on the Dow Jones, the Nasdaq, and of course the S&P 500, and all three are replicating or visualizing the same effect. We had that very, very strong sell-off on Friday across the board, and a complete shift in terms of what we saw through August. So August had a very, very strong month in terms of the global kind of response to sentiment in terms of rhetoric. And of course, on the last week or so, particularly last Friday, we saw the markets unwind a lot of those gains that we kind of visualized through August. And we did obviously, we are on the verge of finishing the month lower after what's been a very, very positive 6 or 8 weeks or so since the middle of July. So we do have to be kind of conscious of that as well. Now, I suppose with the sell-off in the stock markets, with the sell-off in the indices like the S&P, like the Nasdaq, and of course the Dow Jones, we can see that radical shift in strength in terms of the DXY. So the DXY dollar currency index has shown again a massive strength after what's been a fairly choppy volatile, I suppose, 8 to 12 weeks or so. So we had that deeper decline in the dollar strength off the back of indice performance through July and August, and of course with that weakening in the last week or so, and particularly on Friday as well, we're seeing that massive shift in strength and shift in sentiment from risk on aggressive investor approach to a very, very significant risk off move, where investors, institutions are hedging out of the riskier assets and into safer asset classes like treasuries, like the dollar. And we're seeing a little bit of a sell-off, obviously, last week or so in the cryptos. And we're seeing the same again replicate in the stock markets again, alluding to that 1.25 trillion reduction in the overall weight of the stock market values on Friday. So again, looking at the week ahead, today being bank holiday in the UK, there's not really too much today. So we are expecting kind of traditionally speaking, kind of a softer trading session today in London, of course, gearing towards the US Open today and the reaction after Friday's fairly choppy and fairly volatile sell-off, of course, in these three indices. So we just have to be kind of conscious of that as well. Now we do have ECB Lane, who is broadly speaking a dove, and we do have the Fed Brainerd speaking. So Neil Brainerd, who is deputy to Powell in the FOMC, is speaking later today. So other than that, there's not really too much coming out today. So we are expecting kind of a weaker, softer day for movements today. But of course, let's just wait and see, because with the volatility that we saw on Friday, we could see that follow-up of selling coming through on the US session open at half two, the cash open at half two. And of course, that'll be our focal point today as traders to see how is the volatility impacting into these US session open this afternoon. Now, tomorrow, obviously 30th of August, we do have quite a different number of pieces of economic data across the board. So we've Aussie, Kiwi, Japanese data in the Asian markets. We do have a bit of US data, of course, with the S&P Case-Shiller Home Price Index tomorrow, which is something that a lot of people will be paying particularly close attention to, given that new home retail sales in America is down around about 50 to 60% since the pre-COVID highs, or even during the COVID highs of mid-2020. So we're seeing that reduction, that kind of recessionary indicator of reducing new home sales, is definitely going to be something to watch tomorrow off the back of the consumer confidence and, of course, the home price index as well. And it'll be worth keeping a close eye on that. And as we know it as well, these forecasts are continually being revised lower, given the backdrop of this recessionary discussion that we're obviously having at the minute. I know last week we had negative economic GDP out again in the US, and of course that's factoring into this recessionary tone that we're obviously seeing. And of course, if you're anyone who is following Jackson Hole comments from Powell on Friday, he's talked about deepening pressures on the economy, a shift in full employment to probably unemployment ticking back up slightly, which is, of course, as you'd expect to see in a recession, and of course, rising prices off the back of that as well. So tomorrow will be interesting in terms of that. And of course, then on Wednesday, we do have month end. Of course, what we will be doing is we will be doing a second video on Wednesday for month end, specifically, of which we will be focusing on the data then. Wednesday morning, we do have HICPs in Europe. We do have German unemployment. We do have PMIs in China. So we're expecting the volatility really to ramp up Wednesday into month end, and of course Thursday, beginning of September, which of course is a new trading month. So Wednesday we will be on the wires as well, focusing on the volatility for month end, and of course setting the tone into Friday's NFP. So I suppose just a quick round off on that. Then we are seeing, I suppose, that deeper shift in the dollar strength. We talked about the indices sell-offs, and of course we're seeing that movement in the FX markets as well. You only have to look at cable. Cable was fairly consolidated for the last week or so, GBP USD. We did have that initial impulse on Friday, however, that was quickly undone as the Powell put of selling came through on Friday, and we did obviously break through to new lows, retesting those 2020 lows on the cable on the daily, weekly charts at around about this 116.50 level, and that is kind of where the cable currently stands at the moment, is just above this 116.50 handle. So it'll be interesting to see, is there a bit of a recovery against that massive sell-off that we saw on Friday into the beginning of this week, where we went from 118.50 just underneath 119 all the way back to 116.50. And of course, similarly, again, in the euro, we went from 103.5. We did break through parity temporarily. We had that consolidation for a number of days into last week. And of course, we did see that initial sell-off as well on Friday. Euro dollar was above parity, was looking at trying to get above that 101 handle. And of course, with that sell-off, with that impulse of dollar strength, we've seen the dollar strength come back in, and euro dollar broke back below parity again. So we also have to factor that into consideration as well, and just being aware of the volatility, and of course setting the tone for the week as well. So just being aware of that. So it's of course into September, into August, as we know it, we do have to be kind of aware of the volatility in terms of the overall trading volumes, and of course setting the tone for the week ahead. So that's pretty much it, guys, for our weekly video, just to start off the week. Of course, we will be on the wires on Wednesday and of course on Friday with further market updates as well. Have a great week, everyone, and trade safe.